Nvidia's stock continues to catch investor interest as analysts increase their consensus price target upward from $213.99 to $218.51, showing renewed optimism about the company's growth potential. This slight increase is the result of persistently strong demand from business and hyperscaler clients, as well as rising trust in Nvidia's growing role within the AI infrastructure ecosystem. Keep checking back to find out what's influencing this changing story and how to keep up with any new developments. Wall Street continues to pay close attention to Nvidia, with analysts offering their opinions on the company's positioning in the market and expectations for the future. While there are some concerns over valuation and short-term challenges, recent comments shows a good mix of confidence in the company's operations. A number of companies have significantly increased their price targets for Nvidia, pointing to the company's outstanding performance and continued strength in the market for AI infrastructure. For instance, indicating confidence in Nvidia's earnings power into 2026 and 2027, Cantor Fitzgerald raised its price objective from $240 to $300. HSBC set a high price objective of $320 and upgraded Nvidia from hold to buy. This action, which was spearheaded by analyst Frank Lee, demonstrates the company's increasing confidence in its competitive posture and market momentum. After Nvidia announced a strategic relationship with OpenAI, KeyBank, Jefferies, and Mizuho all increased their goals. These companies increased their sales and earnings per share projections for the upcoming years, citing increased demand. Analysts from companies such as Morgan Stanley, JP Morgan, and Truist highlighted that Nvidia's goods continue to have strong demand that exceeds supply, especially in the Blackwell and Grace Blackwell lines. This suggests robust order pipelines and excellent prospects for expansion. The main factors influencing bullish opinion are frequently mentioned as execution quality, innovation, and ongoing leadership in the AI ecosystem. Some analysts point to Nvidia's management's solid cost control and transparency as a basis for longer-term value creation, despite the fact that product demand is still high. Bullish analysts generally agree that solid execution and expanding market size justify additional upside, even though some admit that valuation has increased. Citi lowered its price estimate from $210 to $200 after expressing concern about possible competition from rivals such as Broadcom, and estimating that rival purchases might have a $12 billion impact on GPU sales. Regarding Nvidia's recent investments, D.A. Davidson has remained neutral or more cautious, voicing concerns about the company serving as OpenAI's investor of last resort and warning that some of the growth story may already be represented in valuation. Following recent data, Goldman Sachs predicted that Nvidia's shares may trade down modestly as a result of already high expectations and few short-term surprises. The company advises investors to keep a careful eye on supply chain advancements and demand patterns. In addition to competitive constraints and mixed quarterly results, bearish viewpoints often point to valuation issues and the potential for near-term upside already being built into the shares as potential restraints. Analysts are generally quite confident in Nvidia's dominance of the AI hardware market and see much room for expansion in the years to come. However, others caution that value and expectations are high, urging caution over future performance and competitive. Late last year, the leader in AI chips unveiled the eagerly awaited Blackwell platform. The Hopper architecture, which was introduced 2 years prior, was the last significant release and generated significant income increases. A year or so ago, Nvidia was going through one of its most significant periods. As CEO Jensen Huang told CNBC at the time, the artificial intelligence, AI chipmaker was introducing its new Blackwell architecture, a system that was receiving insane demand. The fourth quarter of 2024 was the first to incorporate Blackwell revenue after the company's March 2024 announcement. Nvidia planned to offer chip or platform updates annually, with Blackwell being the first release of this new practice. Since then, Nvidia's profits have soared thanks to its new architecture. In the most recent quarter, Blackwell data center sales increased 17% over the previous one. Huang stated in the article that Blackwell is the platform at the heart of the ongoing AI competition. All of this has been reflected in Nvidia's stock, which has increased 40% this year. As this tale develops, it makes sense to speculate where Nvidia will be, say 24 months after the Blackwell launch. This is what history has to say. But first, Let's look at Nvidia's current trajectory in the AI business. Although the firm has always been a dominant force in graphics processing units, GPUs, it primarily supplied the gaming industry with these high-performance processors in its early years. After realizing that their applications could be even more extensive, Nvidia created the CUDA parallel computing framework to enable this. As AI's potential became apparent, Nvidia immediately focused on this fascinating industry. That was a wise decision because it helped Nvidia take the lead in the AI chip industry, a position it has maintained thanks to the caliber and performance of its GPUs. All of this has led to exceptional sales profitability. The gross margin has typically topped 70% in recent years, and multiple quarters of double and triple-digit revenue growth. Nvidia promised to update its processors once a year as part of its commitment to continuous innovation in order to maintain this position. About a year ago, the business launched Blackwell. Then a few months ago, it produced Blackwell Ultra, an update. The Vera Rubin system, which is scheduled to be released late next year, is the next item on the agenda. Customers don't have to wait for a particular platform because all of these work together flawlessly. Instead, they may use Nvidia's present system and quickly advance to the newest developments when necessary. However, as was already said, there has been a high demand for the newest systems from large tech clients that want to win the AI race and want to acquire the best tools as quickly as feasible. 24 months after the Blackwell launch, where will Nvidia be? According to Wall Street's average predictions, sales is expected to expand by 33% from this year's levels next year, and the hints so far point to revenue continuing to rise in the double digits. Additionally, as customers' desire to have access to the newest AI technology grows, demand for Rubin is expected to rise. However, what about the price of Nvidia's stock? There are hints in history. Previously, Nvidia released significant new products every 2 years. On May 14, 2020, the Ampere platform was launched, and on September 20, 2022, Hopper was released. And each time, Nvidia's stock shot up into the triple digits over the course of the following 24 months. It increased by more than 700% after the introduction of Hopper and by 120% in the 2 years after the release of Ampere. According to history, 2 years after the Blackwell launch, Nvidia's stock is expected to rise by triple digits. If we start with Blackwell's first quarter revenue, which concluded on January 26, 2025, we can see that the stock has increased by almost 30% thus far. However, Nvidia still has lots of time to report more Blackwell sales, and by the first month of 2027, its stock might rise in the triple digits from where it was earlier this year. For example, if the stock price increased by 100% from its early 2025 levels to $284, the market capitalization would reach $6.9 trillion by the beginning of 2027. This is consistent with my recent prediction that Nvidia's market valuation will exceed $10 trillion by the end of the decade. Naturally, this result cannot be guaranteed. Any unfavorable economic or geopolitical news, or even an unforeseen issue like a drop in tech spending, might negatively impact Nvidia's earnings and stock price. However, history may be correct and Nvidia's stock might rise sharply 24 months after the Blackwell launch if these possible hazards don't come to pass. Instead of merely catching the AI wave, Nvidia turned it into the tide. With a market valuation of over $4 trillion, the well-known chipmaker has transformed from a tech mainstay to a market powerhouse in the last 2 years. With the construction of AI data centers, the stock has now become the engine of the S&P 500. Nvidia is the owner of the top-tier AI computing system. According to estimates, it controls between 80% and 90% of AI accelerators. Everyone is rushing to purchase its chips, including the largest hyperscalers and OpenAI. Software and networking have only strengthened the moat, while AI orders have driven quarterly sales to all-time highs. To put things in context, Nvidia's sales in fiscal 2022 before ChatGPT were $26.91 billion. By fiscal 2025, they had risen to $130.5 billion, a 385% increase. The next big step is Vera Rubin, their new CPU plus GPU platform designed just to fuel AI as we know it today. Nvidia isn't simply updating chips with the platform, it's also increasing the cadence and enabling hyperscalers to make plans years in advance. What is the Vera Rubin platform from Nvidia? Perhaps the next AI growth cycle, Nvidia's next big platform is more than just a trendy new moniker. In order to effectively manage the massive AI inference and training requirements, Vera Rubin combines a new ARM-based Vera CPU with the Rubin GPU, a direct replacement for the existing Blackwell chips. With 100 terabytes of fast memory and approximately 8 exaflops of AI capability, the flagship Vera Rubin NVDA 44 CPX system is anticipated to outperform the existing GB300 NVL72 system by a factor of 7.5. The fact that the new platform is optimized for managing next-generation workloads, such as autonomous agents, generative video, and million-token coding, is another significant advantage for NVIDIA. On the hardware side, Rubin significantly increases memory bandwidth with HBM4 and GDDR7 versions, networking with NVLink 144 and Spectrum-X, and computation density up to 50 to 100 pflops FP4 per GPU. Additionally, according to NVIDIA, the platform has already been taped out and is presently in fab at TSMC. Late 2026 is when general availability is anticipated. Many AI specialists concur that quicker, denser infrastructure, rather than smarter algorithms, will be the industry's next big leap, and Rubin is right in that profitable wheelhouse. Rubin may open the door for the next wave of AI adoption in hyperscalers and corporations with its efficient new rack-scale design and economics, according to analysts. This is why Vera Rubin is important. Larger context windows. Rubin can manage massive datasets and prompts on rack, reducing noise and latency thanks to its massive 100 TOT of rack memory and 1.7 PB bandwidth. Improved ROI calculations. According to NVIDIA, for every $100 million spent in Rubin infrastructure, users may efficiently generate around to $5 billion in token revenue. Always-on copilots become commercially practical and inference costs are significantly reduced if the assertion is even partially true. Rollout predictability. NVIDIA's consistent pace reduces the risk associated with hyperscaler planning, allowing customers to quickly use Blackwell today and schedule Rubin for 2026 without having to retool their stacks. Greater pricing power. Vera Rubin is expected to carry much higher ASPs than Blackwell due to its full rack-scale integration, HBM4, NVLink 144, and Spectrum-X networking, which will increase the company's gross margins. An overview of NVIDIA's GPU progression. Celsius, Kelvin, Rankine, Curie, 1999-2004. A significant advancement that made universal computation possible by moving away from largely fixed-function visuals and toward fully programmable shaders. Tesla, 2006. By creating a unified programming model that made it possible to do non-graphics math on GPUs, the CUDA era began. Fermi, 2010. Improved memory hierarchy and double precision. Kepler, 2012. Increased efficiency and parallelism per watt let data centers to save a significant amount of electricity and scale their core counts. Maxwell, 2014. Stronger real-world throughput is made possible by a significant performance watt increase and more intelligent caching. Pascal, 2016. The introduction of the P100 with HBM2 and NVLink allowed for the first genuinely big AI training clusters by improving memory bandwidth and speeding up GPU to GPU connections. The first tensor cores designed specifically for deep learning, Volta 2017, offer amazing speedups for neural network training. Turing 2018, RT cores with tensor for desktop ray tracing in real time. Ampere 2020. Tensor cores will be widely deployed and data center and client efficiency will be strengthened. Hopper 2022. Adapted for LLMs, the transformer engine accelerates generative AI. Blackwell 2025. Faster interconnects and a variety of memory configurations support a massive training inference jump. Vera Rubin 2026 planned. Vera CPU plus Rubin GPU is a rack-scale, integrated AI platform designed to manage agentic video workloads, larger memory footprints, and extremely lengthy context windows. AMD is rapidly catching up to Vera Rubin from NVIDIA. Its robust Instinct series has advanced quickly from the MI300X of today to the MI350 and finally the MI450 in 2026. Oracle plans to deploy 50,000 MI450s beginning in Q3 2026, which is a significant vote of approval. Additionally, AMD unveiled Helios, a formidable rack-level system that could accommodate almost 50% more memory per rack than Nvidia's equivalent Vera Rubin configuration. Rubin from Nvidia is placing a wager on a dual design, emphasizing a compute-intensive setup that supports raw speed and another optimized for more taxing long context operations. AMD's strategy is more straightforward, though, as it seeks to entice developers away from CUDA by offering additional RAM per GPU and open-source software, ROCm. But in the end, Nvidia still has an advantage when it comes to throughput per dollar and software easiness. Wall Street wagers on the Rubin chip cycle, Nvidia's upcoming breakthrough. Wall Street is praising Nvidia's GPU platform in unison. Goldman Sachs recently reaffirmed its strong buy recommendation, predicting that 2026 EPS will be 10% higher than expected due to the Rubin ramp and robust hyperscaler spending. In an effort to alleviate supply constraints, Morgan Stanley also increased its price objective for the stock to $200 on a 33x 2026 PIE. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.